Hello and good morning, everyone. Thank you for joining this session and welcome to another episode of the Market Snapshot series. So, today is going to be quite a busy day in the markets. We're expecting quite a number of things, especially in the economic calendar, and this is expected to bring in much needed volatility in the markets. And as we always know, whenever there is high volatility, then there is a high number of opportunities available for forex traders. So once you join in, kindly say hi on the live comment section. Remember, this session is not investment advice. It's not a recommendation to trade. So always do your own research, your own due diligence, and practice proper risk management. So we'll be starting with the economic calendar, try to understand the top events we're expecting for the day. We'll be looking at the SNB rate decision that happened a few minutes ago. And once we understand that, we'll do some technical analysis and try to understand the prevailing market patterns and potential market directions over the course of the day. So let's get started with the economic calendar. So as you can see, today is Thursday, the 26th of September. Early in the morning, we had the monetary policy meeting minutes from Japan, the RBA financial stability review, the German GfK consumer climate survey, which came in at negative 21.2, slightly better than expected, but still in the negative, which basically indicates that there is pessimism in the German economy. Then, most important this morning was the SNB rate decision. So the SNB monetary policy assessment, as well as the policy rate, came in as expected. So we expected that the Swiss National Bank would cut interest rates by 25 basis points down to 1%, and this happened as expected. So 11 a.m., this is when we have the SNB press conference. And for those who are new, the SNB press conference is basically a press conference that is presented by the SNB chair and, of course, the governing board members to basically explain to the market about the decision they have made on interest rates. So in this case, about the decision they made to cut rates by 25 basis points. And once they explain that, then they also offer some hints on the future or oncoming monetary policy. And after that, they also get to take some questions, which basically leads to more market volatility and might give you a direction on where the market might be headed next, especially for the Swiss franc against other currencies. So that's just started right now. Then we'll be expecting more events in the day. So at 3:30 p.m., we'll be expecting GDP data from the US. So this is quarter-over-quarter data showing the progressive growth in the US economy. That is the gross domestic product. So as per the previous meeting, as per the previous report, the US economy had grown by 3.0%, and we're expecting a similar growth of 3.0% in the last quarter. So that will be a major event for the day. So if you look at the last couple of announcements, so try to filter this, you'll notice that it's barely missing the forecast. So if there's a big, small difference, it's sometimes on the upside, sometimes on the lower side. So the orange line represents the projection and the blue line, the outcome. So as you can see, over the past 3 quarters, we have seen a progression downwards. So from a high of 4.9, we saw the US GDP dropping to 3.4%, then 3% in the previous reading, and now this time we don't expect a change. We're expecting a similar level of 3.0%. So this is still considered good growth, especially considering that the Fed had revised the US economic growth outlook downwards. So a strong economy tends to correlate well with a strong dollar. And on the other hand, if there is a weaker economy, then it correlates with a weaker dollar. So as per the unemployment claims, which is a weekly data point, it basically shows the number of people who are filing for unemployment insurance. And in most cases, if we happen to see unemployment claims increasing, it often indicates a worsening job market, and that's not something the Fed is looking to achieve. So that's basically positive for the dollar. But on the other hand, if we happen to see much less unemployment claims, then it means that the Fed is achieving its targets. So in that case, we might continue seeing the Fed continuing with its policy of cutting rates. When we say the unemployment claims are rising, it's a bad job market, so it accelerates the rate cuts. So in that case, a weaker dollar. So the opposite is also true. So in this case, rising unemployment claims might be positive for the dollar. So that being said, we'll also be focusing on core durable goods orders as well as durable goods orders month over month, as well as the final GDP price index, which will all be incorporated in the final GDP quarter over quarter report. So the most interesting thing about today is that we'll be having 10 different speeches from the US, 9 from FOMC members and 1 from the US Treasury. So the first speech will be happening at 4:10 p.m. This is FOMC member Collins. Then at the same time, we'll be looking at a speech from FOMC member Kugler. So later on at 4:15 p.m., we get the third speech from FOMC member Bauman. Then the FOMC chair and the Fed chair, Jerome Powell, will be speaking at 4:20 p.m. Very interesting time. Then 4:25 p.m., we get FOMC member Williams speaking. So that's already 5 speeches for the day. We switch over to the European side, where we get a speech from ECB President Lagarde at 4:30 p.m. We get the pending home sales data at 5 p.m. Then at 5:30, we get another speech by FOMC member Barr. So that's already 5. Then FOMC member Cook at 5:30 p.m. still. That's already 6 speeches. Then we get a speech from the Treasury Secretary Janet Yellen, who is also a former central bank chair. So she will be speaking at the US Treasury Market Conference in New York, and this will be at 6:15 p.m. Then from there, we get the 7th speech from FOMC member Barr, the 8th FOMC member Kashkari, and lastly, FOMC member Cook at 1 a.m. So that's quite a lot of speeches, if you ask me, and there's bound to be some good market volatility arising from the various speeches from FOMC members. So how do we approach this? So the one key thing to focus on is the Fed chair, that is Jerome Powell. He tends to have much more impact than all the other FOMC members. So if there's any key highlight from the speech by the Fed chair, Jerome Powell, then that might take the day, and that is especially from 4:20 p.m. That should be about 10 minutes before the New York session open. So he is due to deliver pre-recorded opening remarks at the US Treasury Market Conference in New York. So probably he might not be having any meaningful change in monetary policy views. So just have an open mind to the speech. So on the other hand, there's also the fullness or the complete picture of what the FOMC members will be talking about. So in this case, we focus on the collective. So we can start with looking at FOMC member Collins, Kugler, and then if you do a tally of all the speeches, you can literally just take a summary of what they present and then try to tally it, let's say in a book or in an Excel sheet. And then out of the 9 members, you can also add Janet Yellen in there. Then from there, you can try to see how many are pro, let's say, aggressive rate cuts, how many are pro holding rates at the current level, and how many are pro rate hikes. So by the end of the day, once you have the data for all of them, then you're able to tell the average Fed position on monetary policy. That should help you identify opportunities for the rest of the week and perhaps further into next week. So It's going to be a busy day. Also in the stock market, there's a lot more happening. So we should be expecting some good fireworks. So there's a robot conference coming up by Tesla that is expected to bring in some new volatility. There was a new announcement of VR glasses by Facebook yesterday, leading to the stock heading into a new all-time high. And of course, we cannot forget what's currently happening in the Middle East. There's still escalating tensions between Israel and Lebanon. So all we are seeing in the media is about airstrikes and other stuff. Also, Russia threatening to respond with nuclear warfare is also a key concern in the market, which has brought more concerns about global peace, leading to a very big rally in gold. So also we cannot forget what's currently happening in China. China basically making a big turnaround on its monetary policy, instead choosing to pump a lot more money into its major banks, as well as a stimulus package and a surprise rate cut earlier this week, which could likely lead to a rally in Chinese stocks, as well as gold, as the investors now turn into looking at harder assets or assets that are harder to achieve or mine, including gold, oil, as well as other assets. So from the Trading Economics website, this is what we are looking at as the top news of the day. So one, global stocks rise. So if you look at global stocks, these are some of the major indices around the world. For the day, for instance, the SP 500 is up 0.8%, heading into a new all-time high. The Dow Jones is up 0.33%. Let me share this. Then we have the Nasdaq, which is up 1.36%. The Nikkei 225 index seems to be the big winner of the day, up 3.46%. As early morning news indicated that the Bank of Japan is seeing its neutral rate at around 1%. And if you compare with the current rate, which is 0.25%, it means that the Bank of Japan is looking to hike interest rates by another 75 basis points or 0.75%, which would likely lead to a strengthening of the yen further. So this has had some good response from the stock market, earning 3.46% this morning. So the UK 100 index is up 0.64%. The German DAX 1.19%, the French 41.75%, the Italian 41.34%, Spanish IBEX 1.08%. Even in Australia, we are getting a good rally, 0.99%, whereas for Shanghai, after seeing the news from China about the surprise cut in rates and an increase in quantitative easing, the stock market has rallied 9.65% in the last 7 days, and of course 3.58% this morning. So the Sensex from India, 0.38%. For the Canadian index, it's down 0.1%. And I don't think these other ones are major. So now looking at the Hang Seng or the Hong Kong 50, up 4.44% today and 10% this week. Also, we are seeing some good response from the Eurostoxx 50 index, 1.81% increase. So for Europe, almost all indices are on the green, except for the Oslo, as well as the PSI 20. But overall, it looks very green today. So I hope this continues to be the order of the day. And for Asia, you can see also all the top indices are making some good returns for the day. And for the week, some of them are through into double digits, 9, 10, 12% is a pretty good return. So other important highlights for the day, German consumer morale improves. So the GfK consumer climate indicator for Germany rose to negative 21.2, heading into October 2024 from a marginally revised negative 21.9 in the previous period. So SNB lowers interest rates for that time. So of course, the Swiss National Bank has had its better control of the markets this morning. But now, as we have been talking about, for most of these monetary policies, we are seeing investors playing the game ahead of the official announcement. And whenever there's an announcement, there's an opposite market reaction. So I'll be showing you what this means later in the presentation. So also another highlight, Swedish household lending growth highest in 13 months. Brent extends decline to 71 barrels per day. Singapore manufacturing output rises the most in over 3 years, and Thailand industrial output unexpectedly falls. So those are the key highlights in the market this morning. And now I believe it's time we shift and now head into some technical analysis to understand what's to be expected for the rest of the day and what assets to be focusing on. So this is the MetaTrader 5 trading application where you can be able to access various global financial markets with FX Pesa. So you can also use the Equity Trader app, which is available on App Store as well as Google Play Store. So from this chart, you're able to see different markets. So for our session today, we'll be starting with the dollar index, which made some impressive rally yesterday. But today it started with some form of weakness and it's attempting to make some form of recovery. So following the strong rally yesterday, we had some major moves happening. For instance, the Euro USD hitting this major resistance yesterday led to a big sell-off. So I'm hoping that you guys were able to capture this. But then if you did not capture this, then you can see that the market changed direction from here, made a strong rally, and now seems to be entering the London session with a lot of bearishness. So perhaps an extension further downwards. In this case, not that extended, but perhaps we could be seeing the Euro USD going for this area around 1.10915. So as for the pound USD, we are seeing the pound being one of the strongest currencies in the market. So what we saw here as per last week was the market breaking this trend line here, pulling back to the same trend line and making a strong rally all the way up. So then we had a big sell-off happening yesterday as the dollar was pretty strong. And now the expectation is that we see yet another leg as the pound continues its dominance, following the flipping of interest rates in recent decisions. So we know that the Bank of England chose to hold rates at the current level of 5%. And now, since the Fed cut rates by 50 basis points, overall the interest rates in the US are now much lower compared to the UK. And that creates a big difference that has led to a strong rally in the pound against other currencies. So for pound against the dollar, we have seen the market pushing into newer highs. And the current price level was last seen in March 2022. And of course, if you look at the highs in 2022 as well as 2021, you'll notice that the pound is headed for one of these resistance areas. So try and zoom this out. So we are still on the course of moving higher. So the highest price that we saw the pound trading in 2022 was around this area here. So this is 1.37395. So if you look at the current price level is 1.34313. So there's still more room for upside, especially in this quarter, though we might see some volatility in between. It's more likely that the pound might continue with this bullish momentum in this current quarter. So if we happen to see the pound pulling back downwards, the idea is still the same. Market gets to this area here, then we still look for bullish positions unless there's a break towards the lower side. So let me remove this and say that around this area, this is our value area based on this trend line. But then if there's a break, we trade in the opposite direction. So for pound yen, we have continued seeing the strength of the pound in the market across board. So despite The Bank of Japan promising to continue hiking interest rates. The Bank of England has maintained that it is going to continue holding rates higher for longer. And from what we are seeing here is the market hitting a major resistance area. And now we can see some form of rejection playing out. So I would say this area is an wait and see for the next couple of hours. If there's a clean break, we trade higher. And if there's a clean rejection, we trade lower, with the more likely outcome being the market breaking towards the upper side and pushing towards this upper trend line here. So perhaps we should be looking at a potential rally coming from this area here. So if there's a clean break, then we look at the market extending to this level here. So as for now, it seems like the volatility is weakening over time. So let's wait it out for the day and see how it plays out. So AUD USD had a big sell-off yesterday. It's already making a recovery. So pretty easy and decent outcome here. So we know that the Reserve Bank of Australia chose to hold rates at the current level. So in this case, they are not considering cutting rates since inflation is still high. So we have already erased half the move that had happened yesterday, and the journey continues. We could be seeing some full recovery to yesterday's high happening later today. So as for USDN, we continue seeing some strength coming in from the dollar against the yen. But overall, if you look at the daily performance, we know that the yen had gained about 15% since the start of the year. So just to illustrate, from this point all the way to the July high, you are up 15%. Then in August and September, erased all the gains and came back to zero. And now, as we are almost getting into October, you can see the dollar making a pretty strong bounce here. But then at some point, following the expectation that the Fed will continue cutting rates towards the end of the year, then there is that expectation that we see the prices bouncing further downwards. So you can see my analysis on Monday was that we would continue seeing downward price pressure. This did not happen as expected. So on Tuesday, a pullback and then a continuation down. Wednesday, very strong rally in the dollar. And today, we might be seeing the market pushing further back downwards. So it's important to understand the mini trends that appear over time. So in this case, if you look at the trends within the major trend, this seems to be the prevailing two trend lines. And now, following the price action we are seeing today, it's almost likely that we should be seeing the market rejecting this area and potentially heading towards the lower trend line here. So let's wait it out and see if there's a successful rejection of this area, then the potential becomes more likely that the market heads towards this lower trend line. So the Nikkei 225 index making some very strong rally today and breaking a major resistance area here implies that the bullishness could continue for the rest of the day. So of course, the key level area to watch here is this resistance area here. So yes, the candlestick has not completed forming. So we observe to see whether it pushes through and moves even higher, which might lead to even further bullish momentum. So as for gold, we know the story of gold has been one of the best in recent years. It's among some of the best performing markets this year. So if you look at the price at the beginning of the year, it was $2,037 per ounce of gold. And now we are up about 31% since the beginning of the year. So this is one of the best performances in gold ever. So in this case, looking at what has been happening, I can easily clean my chart since there is no candlesticks on the left, especially after we break into another all-time high. So we go to the 15-minute chart, then you see the triangle that we just broke. So I would say this was the prevailing market action. So the market was trading in a triangle yesterday, a consolidation also to say. So if this was the prevailing market action, then what we are witnessing right now is a breakout outside the consolidation, which might imply that we get a much bigger rally from the last day. So comparing this with the price action we have seen in other consolidations, then it's likely that we get to see at least 26.75 or even 26.80 playing out for the day. So I'm talking about this area here, 26.80. Remember, there are no candlesticks on the left since the market is trading at an all-time high. So a very short-term target for some short-term bullish momentum, 2680 with a potential extension to 2700. So there has been some pretty good price action in gold, and all you have to do is to wait for these pullbacks, buy, and then enjoy as the rally continues higher. So in this case, potential 2680 to 2700 might play out today. So an easy pick, possibly the favorite for the day. Then we have Brent oil, which has maintained very strong bearish momentum. So far, what we have seen is Brent oil trading in this channel here. So overall, this was the prevailing pattern. Now we saw a breakout yesterday, and today is just one story of a big sell-off. So right from the market open, we are seeing a big drop, down 2.31%, as the Saudis promised to increase their oil supply in the market. So right now we might be entering into what we call an oil price war. So an oil price war is where the OPEC plus nations are looking to recapture some form of market share by flooding the market with excess oil. So in this case, this could lead to further prices downwards. So the last time this happened was around April 2020. This is when we had a big sell-off in oil, leading to oil prices are as low as $8, and in the futures markets, we saw even negative oil prices. So from the spot market, you can see what we saw as the lowest prices. So this is what happened in March, April 2020. So for the Brent oil, we saw $19, and for US oil, we saw about $7-8 per barrel. So now, as the nations get into a price war, we can see that the market has already erased all the gains it had made from the beginning of the year. So we're entering a level that is almost below the lowest price of last year, lowest price of the previous year, 2022, so perhaps even 2021 levels. So with this in mind, then the expectation is that the sell-off continues for the day. So whenever you see oil making a unidirectional movement, that usually continues for the day. So of course, there is this short-term target area here, around $70.4 per barrel. So this area might turn out to be crucial for trading today. So expect the market to at least retest this area here, get to this point, 70.417. And then from there, if there's a further bearish momentum, then perhaps an extension lower to $68.475 per barrel. So also an easy pick for the day. So US equity indices are making a very strong comeback, a very strong rally. So we mentioned here on Monday that the key level to watch is whether the market breaks this area to be a signal for bullish momentum. So it broke yesterday in the afternoon, retested, and then continued this morning. The Nasdaq was just 5% away from a new all-time high. So from here, you can see it needed about 3.82% after breaking. So from the 4-hour chart, this is what we are looking at. And right now, we can confidently say that the Nasdaq is just about 2.4% away from hitting a new all-time high. So with stocks like Nvidia, Tesla, as well as Meta or Facebook making their big comebacks this week, then the expectation that the Nasdaq hits a new all-time high becomes quite strong and expected. So also this is an easy pick for the rest of the day, with caution from Powell's speech, which could impact markets majorly. So The US 30 or the Dow Jones made a slight pullback yesterday, bounced from this area and is now headed for another new all-time high. So the all-time high is not far off. It's simply the high that we saw yesterday in the markets. So this is more likely tenable that the market continues in this direction and at least hits a new all-time high later today. Then the SP 500 has already hit a new all-time high this morning. So very strong bullish momentum. So no candlesticks on the left. So only a projection of what's happening. So sometimes we use the previous consolidation as a measure to estimate the size of the next leg. So in this case, from this area here, if you try and project here, so there's still some more room for SP 500. Targets around 57.96 for the day. So the Russell 2000 is the one that has been the weakest. It's an index that measures the small cap stocks in the US. So it has been in this consolidation for the last couple of days, and now it's likely to break the upper trend line following the bullishness in other US equity indices. So the trigger point would be if it breaks this upper trend line here. So that's the area to watch. And if we happen to see the Russell 2000 breaking there, then we go to the initial beginning of the pattern. So a potential rally to 2255 if it breaks above this area. So Bitcoin has been trading sideways for a while now. So after the strong rally that we saw here in this channel, I would say for this particular period here, what we are seeing is a sideways momentum in Bitcoin, and the lower trend line is working as some very good support. And seeing the bullishness we are seeing in US equities, then the idea of a stronger rally in Bitcoin, which could extend to $69,000 per Bitcoin, might be starting as well as now. But right now, for short-term momentum, it makes more sense to be looking at more bullishness from here, targeting 64,763, which was the highest price we saw yesterday, as well as this was on Monday. So the dollar index is already facing resistance here. So clearly you can see that it's failing to form a new high. So potentially we could be seeing the dollar index taking a turn from this area here. So dollar against the Swiss franc is still within, I would say, a 5-week range. So we haven't seen any major breaks. So in the form of trading would be right after it breaks. But if you enjoy trading within a range, then you know what to do. It's to wait until you get to see prices on either edge, either the upper or the lower side. So nothing promising there, but as per the New Zealand USD, after the big sell-off yesterday, potential turn back and seeing the New Zealand dollar rally back to yesterday's high might be playing out, especially considering that this was more or less like a retest. So what am I saying by saying it was a retest? So what we are looking at here is a market that was breaking towards the upper side in a very long-term trend that has been holding for a long time. So this is how it looks on the daily for New Zealand USD. So we adjust this trend line here to reflect this price here. And what we can see is a market that broke towards the upper side, chose to retest the following day, and now might be continuing in the same direction. So it's easier to observe on a lower time frame. So in this case, clean break, pullback, and now a continuation. So in this case, I expect to see the market heading towards the previous high of 0.63552. So USD CAD, we are seeing much weaker oil. So despite the dollar being weak today, the Canadian dollar might possibly not make it to be very strong against the dollar. So yes, we had the big sell-off in the dollar. The dollar made a recovery yesterday. Today, perhaps even some sideways price action, mainly because of the activity we are seeing in oil. So the big sell-off in oil is not very good for the Canadian dollar. So I expect a weak Canadian dollar for the day. So given that, and now we are seeing also a weak dollar in the market, perhaps not the best asset to be looking forward to trade for the day. So pound card, pound being a pretty strong currency for the day, it seems likely that we could be seeing a bounce towards the previous high, especially after we saw the market hitting a nice support area here. So from the 15 minutes chart, you can see some form of sequence was beginning to develop here. That indicated that the market is forming lower lows as per progressive days. And if you look at the highs, they were also seemingly moving towards the lower side. But then for today, it's more likely that the market started with a very strong bullish momentum, and the pound continues strengthening higher as the Canadian dollar gets pulled back down by the oil prices. So in this case, a very strong pound for the day could potentially head straight to the high that we saw yesterday. And now, as we approach the end of the session, I'll be looking at the questions that you guys may have raised, then try to respond them as we approach the end of the presentation. So let's get things started. Morning, Jason. Morning, Ungari Patrick. Morning, Joseph Gisharu and J Squad. Thank you guys for joining the session. So the first question I'll be responding today is from Ungari Patrick. Now that SNB has cut interest rates by 25 basis points, which is the best currency to pair with the Swiss franc, Australian dollar, or the USD? Or could there be even a better pair? So as I was trying to say with the SNB, I think you brought this question at the right moment. The market had already priced in the rate cut. So the expectations were so strong that yesterday, for the better part of the day, the Swiss franc was just weakening against the dollar. And today, after the market announcement, of course, a rate cut is expected to weaken the Swiss franc. However, what we saw is a big drop here. So this big drop after the market announcement is basically an indication that the market had already priced in the information. So you see the big drop spike here, which can be surprising to many. But then immediately after the big drop, you can see the market recovering and the dollar making a rally against the Swiss franc. But comparing the price action that's currently happening in the market, which do you think is the strongest currency for the day? So I believe the best way to do this, you can check a currency strength meter, which will show you the historical price action for the day and the strongest currency in the market. So far, the strongest currency is the Australian dollar, which is positively correlated with gold, followed by the New Zealand dollar and then the pound. So I would be choosing between those three with the Australian dollar as the favorite. So in this case, you might be looking at the AUD CHF currency pair, which is pretty obvious. So you might also want to consider that the Asian session is over and we are entering the London session. So perhaps choosing the pound might be the better idea. So hello, MD Samir, and thank you for joining the session. Rita Wakio, there's a good question here asking, do you offer one-on-one mentorship or with FX Pesa? No, we are not able to do this. We are serving a larger number of clients. So that's why we are able to implement these classes. So if you have an account with FX Pesa, kindly reach out to us or even our support, and we will direct you on our live one-on-one classes that we do. Though it's not one person to one person, the presentation usually involves a larger number of people, but you're able to interact and raise the questions directly. So another good question here. This is our All Sports TV account. Hi, is there a website that can give an informed analysis to indicate the overall position of the dollar, particularly because of the numerous data points today, or can the DXY give the best direction? I believe the DXY is a much better measure, but then also having so many speeches happening at the same day, as I mentioned, the key focus will be on the Jerome Powell speech. Second key focus will be the speech from the US Secretary of Treasury, Janet Yellen, and then the overall picture from all the FOMC members. So I don't think today is the day where you can get all that data because speeches can be very surprising. So I would rather you remain patient and follow each data point independently. So a question on checking on USDN, we already did that. Remember, the sessions are live and recorded. So if you want to see the session later, you can always replay it live on YouTube as well as on X. So there's an account calling itself Stop Loss. Good morning. Pound yen, we already checked. So a good question here. Hey Rufus, you say China had said that they will reduce their rates, but from my info on Forex calendar, it shows that it remained the same. Where can I get info on the lowering of the rates in China? I think it's pretty easy. Just enter Google and search China makes surprise rate cuts. So I didn't say that China said they will reduce their rate cuts. Earlier this week, there was a surprise meeting, as I believe this was Sunday night, and China announced interest rate cuts as well as adjustments to reserve requirements to banks, which is equivalent to a rate cut, 50 basis point cut, and that was already implemented. So now we are looking at market reaction to that, and that's why we are seeing a strong rally in Chinese or Asian equity indices. So that's it for the day. We have already analyzed the major currencies, commodities, as well as indices. Thank you very much, everyone. Thank you for your time. So remember, we have new episodes that have just been released on the Bullish Banter podcast, which is available on YouTube as well as other podcast platforms. We have a new episode of the Financially Incorrect podcast. So make sure to check that out too. And if you're looking to start learning how to trade Forex, go to FX Pesa YouTube and then check the Novice to Pro course. It's free and available on the FX Pesa YouTube. And also, if you're looking to begin your trading journey, I would advise that you check the links in the description below. If you're watching this from X, make sure to like and share the video, and check the FX Pesa handle for links to register for an account as well as links to learn how to trade. So also the FX Pesa Financially Incorrect podcast has successfully been nominated on 2 levels in the Pulse Awards. And if you check our socials, you'll see the links with our updates. And hopefully, if you give us a vote, we'll win these Pulse Awards. Thanks to you for being our good listener, and of course, for being our avid supporter through the journey. So thank you very much, everyone, and enjoy the rest of your trading day.